Hi, everyone. Thank you for being here with us today for the virtual CFA Media Awards ceremony. Before giving the awards to the elected journalists and outlets, we have the honor to welcome two prestigious guests for a unique virtual roundtable discussion about the transformation of finance, its impacts, and issues. A topical theme that has been addressed in different aspects in the corpus of articles received by the most important French media, both specialized and generalist, but also a topical theme that has been studied by CFA Institute in its latest report, The Investment Professionals of the Future. First, I'd like to welcome Nadia Tortel. Nadia is Candriam's Global Head of Talent since 2016. She has spent more than 16 years working on international recruitment in the asset management and investment banking sectors. And I'd like to welcome Gary Baker, CFA. Gary is the Managing Director for the EMEA region, Advocacy and Research at CFA Institute. He has a 30-year career in institutional equity research working in Asia, Australia, the US, and Europe. Nadia, Gary, thank you for participating in this roundtable and for sharing your experience and insight with us today. So let's begin. Question number one, perhaps the trendiest topic. ESG criteria have become more and more important during the last years. Morningstar reported last summer that for the first time on record, assets under management in funds that abide by environmental, social, and governance principles have surpassed $1 trillion. In a post-COVID world, we might expect that both retail and institutional investors' demand for ESG investing options will further increase. How can financial professionals adapt their strategy to meet these reinforced expectations?
Maybe I'll have a go first up on. I think there's several strands to this question. I think that's going to be important, I think, for firms and also investors to appreciate over coming years. And I think one of the key things is this distinction between perhaps ESG investing, ESG integration, and ESG analysis. And I think there are different elements to that. So, while funds, I think, will feel a need to actually demonstrate actual products and offer investment products to investors, I think what is just, if not even more important, is being able to demonstrate that integration of ESG analysis into every product within a portfolio, because I think it will become increasingly the norm that is expected, whether you are running something labeled as an ESG fund or not. You'll be expected to really be taking some element of integration analysis into your work. And I just think that will become a regular part of any analysis, because in many ways it is just about risk. It's about appreciating risk in a wider context over a wider time frame. And in that respect, there are very, very marked similarities to mainstream analysis. But obviously, given where the funds flow, as you mentioned in the question, is going, it's only going to intensify in terms of significance, and that will put increasing pressure to demonstrate ESG credentials for everyone in the industry.
Thank you, Gary. Yeah, I'm totally aligned with what you said, actually. And indeed, what we saw at Candriam is that SRI strategies have been constantly increasing in terms of demand. Best-in-class integration, depending on the typology of client, I would say the demand would be different, of course. We have more than 20 years track record in responsible fund management. We have been expanding and strengthening our teams to support this trend and the demand that we saw for the SRI strategies. How did we do this? Actually, first of all, and I think this was the case also for the competition, a lot of investment management houses have been either building from scratch or strengthening, expanding their ESG research and investment teams. This was the case for Candriam since several years. And over the last year, I would say that we have really expanded our ESG research department. but it's not only about recruitment and developing the number of people in the teams. I think it's also about educating people on ESG. And this is actually what we really tried to do. We have invested a lot within Candrium in upskilling the ESG knowledge in-house. All our employees, of course, investment professionals and researchers, but IT, admin, finance, HR people, everybody has gone through an ESG training. 2 years ago, we have launched the Candrium Academy. The Candrium Academy is a learning platform. Maybe you've heard about it. So this learning platform actually was created internally, of course. And it has been set up to raise awareness and education on the topic of responsible investing. So at the beginning, we have created this platform in order, it was really intended for financial intermediaries. Today, it is an open platform. It is free. It is a lot of our clients, institutional, private clients have gone through the platform, and even a lot of students are connecting on this platform to develop some knowledge about ESG. So yeah, I think really to support this trend on the SRI development, I think it's really a lot around education.
Thank you. So moving on to question number 2, data management, artificial intelligence, rise of ICOs. Technology has also had a tremendous impact on the investment sector. Do you expect a new norm to emerge? Will human intelligence and face-to-face relationships survive?
I tend to, sorry, Nadia, go on, please, go ahead.
Okay. Oh, I think it's the same challenge, I would say, then on the ESG somehow. I think technology, digital transformation is really everywhere. And I think during the lockdown, I think that we are all aligned to say that without technology, we wouldn't have had this business continuity that we had. So technology is really crucial. Technology, digital transformation, again, is everywhere and is very important, is really very important on a day-to-day business. Of course, it is there to help probably our process be maybe more efficient, even much more efficient. Automation is again crucial in our investment management industry. The industry is very competitive. The margins are tighter and tighter. So we need to move on with automation, with technology. And again, here, I think, well, at Candrium, we have really supported our teams also in terms of, expanding the teams, but also upskilling and helping them, as a responsible employer. We really had to provide our teams with all the technical trainings they need in order to keep on track, in order to maintain their human capital.
I think it's very interesting. I guess I come at it from an analytical, or as an ex-research analyst, and I think back to when I started in the industry, and technology was just in its sort of early stages, you might argue. When I tell people this, new joiners, they hardly believe that. I mean, computers were just really making a widespread introduction. So I think technology has always been with us, but clearly the pace of change has undoubtedly increased over the past maybe 5 years in particular, I think. And now that we're talking about artificial intelligence, machine learning, it is of a different scale. But the interesting thing is, again, if I put my analytical hat on, what this is providing us with are more inputs. Now, is that then changing the requirements of analysis? Perhaps not. You've still got to value cash streams. You've still got to understand business models. But what you have is probably more tools and more inputs at your disposal in order to reach those, you hope, higher quality conclusions. But the trick there, I think, is relevance. It's materiality. It's trying to understand whether another data stream is really going to help you in your process. And I think that's where the human skill really comes into this. And that's why I am pretty bullish and optimistic about the role of humans going forward within the investment process, because I think the ability to understand and synthesize, prioritize, is crucial, and it is an innate human skill. You know, I say a lot to junior analysts coming into the industry that the more experienced you become, the greater your ability to ignore and destroy information. Not because you've got to wipe away certain amounts of information in order to concentrate on what you think is really important and vital to your decision-making process. And when you're a junior analyst coming in, everything seems important because you just don't have the experience filter to understand, okay, what really is going to drive my stock recommendation or whatever else. And I think that is a vital skill. But throughout, it is always this combination of human intelligence and artificial intelligence. So, you know, I always tend to look at that as augmented intelligence. I mean, that's what the partnership is. And so you've got to look for skill sets that are capable of really developing that and embracing it. And as I said, I think there are many, many people in the industry that are capable of that, understanding technology, but in a practical sense of putting it to use rather than it just existing for the sake of it existing. And that's the danger. We can tend to fall in love with technology without necessarily thinking about what the practical implication and application of it actually is.
And without human intelligence, we wouldn't have artificial intelligence.
Yeah.
And at the end, we are in a service-oriented business, aren't we? So the relationship between people, the contact with the client is just crucial to our business. So I totally agree with you, Gary.
I'm sure that will change as the conversation goes on.
So we talked about ESG and technology. Both imply changing roles in the investment industry. You can hire new profiles, but you can also train your employees. This brings up two questions. Which types of new profiles or competencies are highly valuable in research today? And how do you help your existing employees develop these new skills?
So maybe if I can take the lead, Gary, if you don't mind, this is 100% my field.
I thought you might have a view on this.
Yeah, actually, I think we agree on the fact that human capital is really the most valuable asset of a company. And human capital to me is two things. There is, of course, the technical skills, expertise, and this is what we would be always looking for, and the foundations, if I may say. But in the current environment, the very fast changing environment and very challenging environment, I think that expertise and technical skills is not enough. It's really very important to have strong interpersonal skills. So it's important to help people develop those interpersonal skills. Curiosity is important, agility is important, flexibility, adaptability. I think all this is really compulsory today if we want to succeed and if the company wants to be successful. Again, it is important to have the right expert at the right place in the company, but then we have also to help them develop skills that will allow them manage better maybe this tough environment in which we are all today. So it's really a combination of both. And we've been developing a lot of programs, trainings for our leaders, for our employees around emotional intelligence, around positive leadership, people management. It is very important and now it is even much more important to help our employees navigate in this context where everything is done remotely. It is important to help them develop all the skills they need. For example, for managers to keep, the relationship with their teams, to be able to engage them, to motivate them, etc., etc. So, yeah, I think this is really the trend.
I think it's fascinating. I mean, we're going through this extraordinary experiment at the moment. I think we'll come on to this later in the conversation on this sort of cultural change of working from home and the challenges that is providing. But I do think that there's a series of unwritten and unwritten contracts, I think, between firms, employees, industry, where I think traditionally finance and investment has attracted very bright people, where you assume a core level of curiosity and a fundamental interest, I think, in the world of business, because you are investing in that. You're investing whether through equities, commodities, futures, fixed income, whatever it might be. You need that core level of curiosity and just a general interest in terms of what firms do, and what firms do is vital to society. And so you've got to have this broad-based knowledge, and I think it does start with that. But then the other part of that contract, I think, is that individuals do rely on firms to try and offer that transparency and navigation and help to make sense of their own careers as well. That whether that's offering skill sets formally, or encouraging people, sponsoring people to go off to get further education or other sources of information. And I think that is increasingly the requirement, that firms can expect a core level of curiosity, but they also have to try and nurture that and encourage people to utilize and take up opportunities to do so. And I don't think that has necessarily changed, but again, I think it can feel a bit daunting given the pace of change in the industry. And I certainly worry at times about that middle layer within firms, because young people coming in are used perhaps to a very tech-ready environment. You've got senior managers that perhaps can see a big picture, and marrying those two views and helping that middle tier of employees to navigate, to upskill, to think about change is a real challenge, I think, for all firms, whether small, large, whatever the size, public or private sector. But it is absolutely vital. We can't just lose sight of a whole cohort of workers because of the pace of change within the wider industry. And that is really on firms, and it's on the industry generally to really embrace and accept that, I think.
Thanks, Gary. So, companies' organizational culture also has a predominant role in attracting and keeping the right profiles and the right team. Have you seen the work environment and culture in investment firms change over the years? And if so, what aspects should change in the coming years?
Wow, I think this is a really big and very pertinent question for where we are currently. And as I said in my previous reply, I think we're all engaged in this extraordinary experiment as to suddenly uproot a workforce from an office structured environment to a dispersed work from home environment with no roadmap, we've had no training exercises on this. And I've been fantastically impressed and in some ways relieved, I suppose, that process has gone remarkably smoothly. So many firms that I speak to have found that people have been very adaptable, their business models have been able to stretch, and that now is going to have a longer term cultural consequence, because now there's an expectation on flexibility, on hybrid models, on reliable technology, on different ways of communication. I mean, for me, within CFA Institute, the key thing that this has probably done for me as a leader is to flatten communication structures. You know, people expect to be able to hear from you directly, not necessarily through these sort of, you know, traditional organizational pyramids, because technology can flatten all communication structures. And I think that to me has been one of the largest and biggest changes. And I've enjoyed that process, but for others, I think it's been really, really challenging. And as Nadia said earlier, that I think it's put a premium on communications, because it's, you know, communicating down a virtual link is just so much different to face or trying to engage an audience in a room of 25 people. It's a very different skill set that is very, very challenging. And so, you know, that is, again, is cultural change. But what we talk about in all of this, you know, is T-shaped skills and the adaptability and flexibility. And I think if there's one message or one lesson we've learned from the last 6-9 months, is that need to factor in that adaptability and flexibility into any business model or any career or any approach, because change happens unexpectedly at times. And I think that really has been driven home to everyone.
Yeah, I think really the two key words I would say are agility and flexibility. I think it's the cycles are getting shorter and shorter. The client needs are really very different. The constraints are different. And I think in this, again, very changing environment, it is very important to be flexible. I believe personally that the top-down management style is not as efficient as it used to be. I think we have to move on from this, you know, very top-down against style of management, and be more maybe in a think globally, work collaboratively, have a more transversal approach, be more in a project management, kind of, yeah, managing people and having them work together. If we want to have an attractive workplace, then we have to set up an environment that is very, very agile and that empowers people. And I think that people are asking more and more to be empowered and involved in decision making.
I think it's a great point, Nadia, that, you know, I think we've had to put much more faith in individuals about their ability to get on with things and seize initiatives, take initiatives themselves. And I think that, you know, that has been a very welcome, a welcome development, but B, I think it's, you know, again, talking to a lot of firms, I think people have been really impressed and happy that people have responded so well to it, that, you know, they've enjoyed that empowerment. And, you know, and once you've tasted that, that's very difficult to then go back to maybe a previous existence where you were a bit more starved of information and autonomy. And so this really is going to have long consequences. I think we talk about long COVID in a medical sense, but I think there's long COVID in a business culture sense as well, that we will find, you know, that we'll increasingly have to adapt and learn from what we find in coming months.
Thanks, Gary. So speaking of companies' environment and culture, at a time when the importance of team spirit is increasingly emphasized, do you think we could see the end of the superstar asset manager?
I think the superstar asset manager concept is not sustainable. Again, the environment is getting increasingly complex, and it is complex in different directions. Regulation, risk management, client desires, client constraints. So yeah, in such a context, I don't think that the superstar asset manager can replace, I would say, a whole system. And my question is, okay, superstar asset manager, but is this not too risky for the firm? and even for the clients, even in terms of succession planning. It is not possible to organize any kind of succession planning in this kind of concept. But I think also that this is very much linked to the corporate culture. If I talk about Canrium, we have a culture that is really very much oriented around team spirit. Each effort is going to be a collective effort. Each success is going to be a collective success. And I think this is also, a question of corporate culture and values. And again, I think it's important to know what our DNA is and what we want to provide to our clients. In terms of culture, in terms of way of working, etc.
Yeah, I would very much agree with that. I think, and the key there is that risk mitigation. I think that and if we look at evidence of performance as well. I mean, I think increasingly as we've seen performance stats on so-called staff and managers, and the ability to repeat that and to sustain long-term performance, I think has been questioned. And I think for firms, in terms of thinking about longevity and satisfying client demands, then again, back to risk mitigation, you've got to develop processes that can withstand a loss of individuals and can withstand the changes inevitably that come and go within investment management firms. So I think that model, to be fair, has been under pressure for a long period of time. I think the demands of that role and the need to, it's no longer sufficient for clients to just say, hand your money over, trust us, we'll give it you back in 2 years' time with a performance of this. You've got to be able to demonstrate process as well now. You've got to be able to demonstrate what your methodology is. And that can often be at odds with some kind of star management guru sitting in the corner, just occasionally putting ideas out into the workforce. I think those days are numbered. So we're very much involved, I think, now in a collegiate team effort where we get back to this point of widely dispersed inputs that need a team to really gather it to then crystallize key decisions, and that does take a team. It's I think that is beyond the capabilities of individuals at this point. We're just into a much more sophisticated analytical and investment environment, I believe.
Thank you. So let's talk about our current rate environment. We live in an unprecedented low or even ultra low interest rate investment, which might last several more months. This creates opportunities in fixed income. How can other financial professionals adapt themselves in such a context to prevent investors to venture away from traditional investments?
I'm not sure our role is to prevent. I think our role as analysts and investors is to try and explain, it's to try and illustrate, and it's to try and understand what the end client is trying to achieve, and come up with ways in which we can try and satisfy that. I think given that rate environment, I think it's very difficult for us to sort of sit there and say, maintain that traditional 60-40 fixed income equity split and you'll just be fine. Because I think that flies in the face of evidence. Whether we look at where endowment models have gone over the past 20-25 years, or the rise of so-called alternatives, but alternatives now are such a large proportion of any sort of balanced mandate that I'm not sure we can term them as alternatives. They're just another asset class that we have to embrace. So I think we've got to remember that at our heart, that the authorities, central banks have achieved what they set out to achieve, which is to drive rates to a very low extent, to inject liquidity into the system, and to encourage everyone to take greater risks if you are going to seek returns. And I think we can't ignore that. I don't think we can fight against it. We've got to deal with the markets as we see them, be consistent in what methodologies we employ, but be very, very transparent in trying to understand client needs and then address what is suitable, what is achievable with the client in terms of whatever investment approach that we then offer to them.
Yeah, I'm really not the fixed income specialist, so I won't comment on the low rate environment, but I understand that our portfolio managers are getting used to it. And yeah, I think that it's again, as you said, Gary, it's a lot about understanding, anticipating the client needs and addressing it properly by being innovative and trying to bring some solutions, new ideas to the clients. Again, it's a question of being adaptable and adapt to the market circumstances and bring something new and something different to the clients to address their needs.
I think there's, and there's obviously been several additional angles that have been introduced. I mean, the rise of private markets versus public markets, I think, is another interesting trend. Now, do we sort of consider private markets as non-traditional? Well, by definition, they are, but they're becoming, I think, an increasing source of potential return as funds are sort of being attracted to them. And I think levels of transparency are gradually rising. And obviously the expertise and analysis being applied is also increasing. So, I do think we should fear that. I think we've got to understand it, we've got to embrace it and be prepared to work with that, because there are opportunities in all sorts of asset classes out there. And I don't think we should be sort of telling people, preventing people from it. We'd be trying to maybe lift the lid and explain it, and then choices can be made.
Thank you both for your input. We do have one last question. More and more asset management firms are getting international. In particular, there are developments in Asia where large companies are forming wholly owned subs. What are the challenges of internationalization? How do companies cope with cultural differences, skill sets, or differences in regulation?
Shall I?
Please do, Nadia. Yeah, I've got to think about this.
So, actually, Candrium covers Europe. We also have a presence in Asia. We have a presence in the US. We have a presence in the Middle East. We have more than 30 different nationalities over the company. And in our biggest office, that is Brussels, we have, I think, more than 15 maybe nationalities. So somehow we can say that, yes, we are global. We provide global products. And we have, again, a presence in more than 14 countries. But at the same time, even if we think global, each country is going to have its own characteristics. Clients are going to have their own characteristics. So we just have to be local as well. And if we want this to work, the global and the local together, I think here again, it's going to be a question of corporate culture and values. Values is really very important there. I think all the people have to share the same values, and those values have to be, of course, transparent to the client, and the clients have to adhere to those values as well. So I don't know if there is a real challenge around globalization. I think the answer is again about the DNA, the culture, and the values of a company. And this is independent of the nationality or the country.
I think that's very well said, and I think it's a difficult question because I've lived and worked in a lot of different countries in my career, and I think that's the point. It's a lived experience. I mean, we can be theoretical about all of this, but I think it is about a lived experience, and I'd certainly recommend it to everyone to try and take in that a rich source of ideas. But I think there are some universals. I mean, the language of finance, numbers, is universal. What's not necessarily universal is the cultural determination, as you say, values, and some of those decisions that go into then assembling those numbers. But the process of analysis, again, analyzing cash flows, that is the same in whatever country you are. But what you've got to understand are the factors that will influence that could be very local in terms of nature. One area which I do think that is definitely does stand out, though, is regulation. I think time and time again, if we look at investment differences and challenges in jurisdictions across the world, a lot does come down to different regulatory environments, and that you have to obviously tread very carefully and be very well versed in terms of local requirements and restrictions. So, but I think the upside and the benefits from having that broader global view for everyone is just so overwhelmingly positive in terms of ideas generation, in terms of accessibility and openness of mind. I think that is so important in terms of what we do as a business and as an industry. So yeah, I'm a huge fan of it. I think it is something that we've got to continue to work and safeguard.
Well, Nadia, Gary, thank you very much for being here with us today and for sharing your insightful and inspiring vision on the transformation of our sector and its prospects for the future.